That's a huge number. That was not the case a week ago. Good afternoon, this is Jim Perry at Perry Capital. It's Wednesday, April 15th, and this is my weekly Macro Minute. I'm sending it out today, not just because it's hump day or tax day for U.S. taxpayers, but because the S&P 500 made an all-time high today, as did the NASDAQ. There's a lot of reasons for that. Let's get into it. Geopolitics is the topic of the Macro Minute. The reason for that is that the probabilities for peace in the Middle East are higher today, according to Polymarket, than they have been in 2.5 months. That's a really good sign. Great for economies, great for humanity, great for investors. War, of course, is just the opposite. VIX has gone back down to 17. Oil is back down to 91 from 120. That's a 30% drop from the highs. The pre-bombing level of oil was about $65 a barrel, so we've got a ways to go there still, and that will happen over time, probably over the next month or so. I think the key thing is that the U.S. technology, led by the U.S. Navy and Air Force, have controlled the traffic through the Straits of Hormuz. Will there be some problems? Of course. Is it going to be a smooth line? No chance. Is it restricting the exports of Iranian oil? Yes. That changes how the Chinese look at things and how the rest of the Asian economies do as well. They will have to start buying oil on the open market in dollars. That was not the case a week ago. The defense of the petrodollar has been steadfast, and I suspect that the hegemony of the petrodollar and the dollar as a reserve currency will be with us for the foreseeable future. I'm very pleased to see the S&P make a new high today. I've been talking about a new high as recently as last quarter and last month and last week. I didn't think it'd get here so quick, so it's encouraging that it did so, and it's encouraging that the reasons it's done it are sound, they're fundamental, and they look to continue. This is a point for investors. So the S&P 500 is expected to earn 13.2% growth rates in profitability in Q1. This is a phenomenal number and will represent the 6th consecutive quarter of 10% plus earnings growth rate in the S&P 500, which is a really good number. The technology sector, and I almost had to look twice and then looked it up twice, technology earnings per share are expected to be 45% growth rate in the quarter, 45% from last quarter. That's a huge number. I had to look twice. Revenue growth rate in the technology sector is expected to be up 27%. So is it any surprise that investors are buying the technology sector at a price earnings multiple in the low 20s, which, funny enough, equaled the price earnings multiple of the energy sector about a week ago? The PE in the energy sector went from 14 to 21 and was equal to the PE of the technology sector. I've been underweight the energy sector because I just didn't buy into this sort of energy rally. But the point is that energy is lagging, and the technology sector at 21 times earnings is as cheap as it's been for 5 or 6 years. So technology sector is cheap. It's earning a lot of money. It's the most profitable sector of any stock market of any size in the world. And I expect that to continue. We also have an overweight in the defense sector, which is doing very, very well. And I expect it will continue to do so. And that, of course, is a big portion of the industrial sector, which we have as well. So I don't give everybody our asset allocation anymore. Now it's just clients. If you want to be a client, you get the whole allocation. If you want to get this little recap of it, that's good enough. All right. Good luck. I will talk to you next week, and let peace come our way and let economies come our way on the growth side, and let the world be a more peaceful place for humanity, especially in the Middle East.